Good evening, TheoTrade. This is Coy Rosenblum, and you're watching the Theo Nightly Video for January 29, 2019. Well, we're talking earnings, mainly on Apple, but don't forget other stocks like AMD, eBay, and Alliant Technology have reported by the time you see this video. And it's going to be the after the market close earnings levels, spots, markers, and expectations. But we'll also take a look at what these levels are on the daily chart of these key stocks and the Nasdaq as we play into Wednesday's Fed Day. That's going to be the big news for Wednesday after we get all these tech earnings. So take a look at those and how the market opens in the morning on Wednesday the 30th. But first, this is our S&P grid, and all we're going to see in this kind of heavily annotated chart, these still are Don's gravity spots. Roughly speaking, 2682 is our upper pivot, just shy of 2700. We're still playing intraday, range, triangles, rectangles, consolidations off this 2626 level. That's our key pivot spot marker, and it has been really a late part of 2018 and the beginning of 2019. So we're going to expect this range to continue until we get a breakout. That's going to take us above 2682 through 2700, and that's going to push us up into this open air zone. That's going to be 2750, 2732, and upwards all the way to 2800. That's the bull breakout thesis. Not there yet, of course. I think the probability does tilt to the downside. That's going to be our dominant bear thesis. That's under about 2626. Let it go under 2600. That's going to be 2575. I'm going to allow some leeway here, and if ever the market gets under 2550, probably see additional downside to retest 24. But again, we aren't there yet. We have Apple, we have tech earnings, and we have the Fed Day tomorrow. We won't predict what they'll say, but those could be catalyst for the future. And that could be the catalyst that gets the market in a short squeeze, alternate thesis, bullish breakout all the way to 2800 or down to our lower support targets. Nasdaq levels, similar. But again, roughly 6,800, 6,600, this gravity spot or high volume area or high price chop is where we are. It's about 6,700 or 6,750. Now let's talk earnings. We'll start with Apple. All I can do is look at Apple and its expected move at about $9 to the upside or $9 to the downside. That's going to put it from this consolidation. Now, Apple is similar to the market on this V-spike reversal up, but the last few sessions have been consolidations or chop or range. Earnings is just the thing to break a market or a stock out of a range. So look to play any departure from this spot up above, I'd say 165. That would take it above the earnings expected move and above the 50-day moving average. That's your upside target. If the earnings miss and if the conference call misses, and if the bears come back out, still it could be logical. We play a departure down from 160 per share toward about this $9 down at about 148, 147, thereabout. And that's taken roughly from where it is now at about 145. So these are your Apple pivots as we push into the earnings, which aren't here yet. All right, the other stock we're looking at is AMD, Advanced Micro. It also has an expected move, $22 roughly speaking, and just about 17. As we see those, it's about $2.50 up or down. Not a lot to expect from this one, but it's going to be good to watch as we get a feel for what other technology names are doing and reporting. Don't forget things like NVIDIA also play into that as well, right? Rejection away from the 50, 160, and that's pushed us down to the lows. Could NVIDIA be foreshadowing what the future would be for tech names, or at least leading tech names or computer names? Now we do have earnings for Alliant Technology. It's down here at the moment of this video because it failed to break through. So this is our 225 level. Alliant Technology has, roughly speaking, about a $23 up or down move. But at the moment, as of this video, it did fall to and a little bit beyond its expected move. We'll take a look at that now. Now this is Alliant Technology down on the 5-minute chart, which shows us the aftermarket hours. And the stock fell from the 220 level, remember that 23, roughly speaking, expected move, took us down to where we are at this moment, which is just under 200 per share. It did rebound quickly off of 190. So certainly watch Alliant. If you don't trade it, that's okay, but just watch this market mover and the stock that has fallen from its key resistance on the daily chart and lower. Again, AMD will report, and it just reported, looks like we do have some activity, hyperactivity down, hyperactivity up. But watch for it to stay within the expected move of roughly 2150 and about 17. At the moment, it's there. The big one, of course, is going to be Apple. We're not quite at the point that we know what the earnings are, but we're probably 15 or so minutes away as of this video. Now, all these things do play, and by the way, Apple does have its expected move, again, of about $9. That takes us again to about 163 or 148. Again, the daily chart of this and others, the bullish catalyst, and these things could be overruled by a Fed that announces a more dovish policy. We'll be watching it in terms of, are they going to stop their tapering or stop their bond buyback program? If so, that could be very net bullish for the equity market. Will they announce that they won't raise rates at all in 2019? Well, they probably will not do that, but if they do, that could be a bullish candidate. Will they announce they're going to be more aggressive with their bond buyback program? Probably not, but that would be a much bearish catalyst. The point is that we don't know. So we are looking at levels, looking at spots, maintaining and managing open positions with respect to any breakout above 2,700 could be the catalyst to push the market even higher. Traders don't think it can go there, so if that happens, it could occur quickly. These whole moves here were the alternate thesis, this market can't rally, a movement, which eventually, of course, did. To the downside, I think a lot of traders do expect more downside activity, so at the intraday levels, at the lower time frames, or any option positions that remain open, keep a watch on these downside targets. Any break under 2626 should lead to 2600. That should be easy. And then down to 2575. It gets interesting this week or next if the market does break out of this range contraction and then moves under 2550. That's our drop zone. But again, we aren't there yet. We'll watch Apple's earnings. We'll watch how the market behaves pre-market. And of course, on the Fed day tomorrow. This is Corey Rosenblum for the Theo Nightly video for January 29, 2019.